afternoon, guys. Oh, there we are. Now we are recording. I don't know why Streamlabs has been acting up. I know several other people have had issues with their Streamlabs this week. So it's been like, I don't even know, crazy ass week. Not just for me personally, but for just like crypto in general and just SEC, and then we got Elon, and just like all this crazy shit has happened this week. And it's Friday, and we're just gonna do kind of like a wrap-up video about news that has happened since when was the last time I did one? Thursday, I want to say. What day was this? Oh, 2 days ago. So Wednesday. As you can see, guys, this is AM Daily Crypto. Over here we have our website, AM Daily Crypto Twitter, my Twitter, Xander's Twitter, and then this little button right here will take you to our coin tree. I do not work. Unfortunately, I am not able to work due to my disability and my MS, and then I have 2 small children, one of which is more than likely on the spectrum, my youngest one. So this is kind of like my way of just sharing my knowledge, but also kind of having adults follow me and kind of in a sort of way having an adult conversation. So with that being said, guys, please like, subscribe, hit the notification bell. As always, we are now up to 36 subscribers. We are going pretty well daily. We're growing. And I have a couple of new projects that I will be talking about in the next couple of days. I think I've got like one on Ravencoin, and then I've got 3 or 4 on Ethereum Classic. So with that being said, guys, let's do the intro and then let's get into it. I love that intro. I may end up taking the little like watermark out of it. But anyway, this is probably one of the last ones that I will be talking about because it is kind of a longer article. This is Betting Big on Bitcoin was a short-term mistake, admits Scaramucci, written by Mandy Williams. Famous American financier Anthony Scaramucci has admitted that having massive exposure to Bitcoin was a mistake in the short run, as he and his investment company suffered significant losses amid the bear market. I think everybody did. This is why I continue to say, please keep yourself safe in this bear market. Get your stuff off of exchanges and get your stuff into a long-term cold storage wallet or anything like that, because it's crazy going around. Besides this, we have OpenSea freaking getting somebody in the management piece of it getting arrested because of insider trading. We have Elon like thumbing his nose at everybody. So yeah, it's been a crazy week for crypto, just saying. So we're just gonna get into it. In his latest CNBC interview, Scaramucci noted that while his Bitcoin exposure via his investment firm Skybridge Capital has incurred significant losses amid the market downturn. You two stop, leave my kitty alone. We just got home from like 2 days in Santa Barbara, so our dogs have go away. They're grumpy because there's a kitty underneath me, underneath my feet, and they're trying to get to it. Girls, princess. Okay, there we go. So let's start this over. In his latest CNBC interview, Scaramucci noted that while his Bitcoin exposure via his investment firm Skybridge Capital has incurred significant losses amid the market downturn, he does not regret investing in the cryptocurrency. He stated that he firmly believes in Bitcoin's long-term potential and intends to hold on to the digital asset for as long as possible. Scaramucci reiterated his conviction that the leading cryptocurrency will be a significant part of the future. Quote, I don't regret it. To me, short-term is a mistake. But remember, everyone is a long-term investor until they have short-term losses. So I want to measure the Bitcoin investment over a 4-year interval. I think if you've held Bitcoin for a rolling 4-year cycle, you've made money, he said. Scaramucci went further to compare the market's present conditions to the early days of Amazon. He pointed out that some investors had purchased Amazon shares during the March 2000 debacle. However, when bearish market conditions caused the shares to plunge by more than 90%, many people thought the investment was a mistake. Scaramucci recalled the cover of an old Barron article with the face of Amazon's founder, Jeff Bezos, on a cartoon bomb that was about to explode with the headline Amazon.bomb. Fast forward to more than 2 decades later, Amazon has become a multi-million-dollar company, revolutionizing the e-commerce and cloud computing industries. The financier believes Bitcoin will have the same fate as Amazon. Interestingly, Scaramucci's thoughts echo that of Edward Dowd, the former managing director at BlackRock. Earlier this week, Dowd described Bitcoin as the Amazon of the crypto era. That's funny. Adding that the cryptocurrency will be in everyone's portfolio in the future. Meanwhile, Scaramucci's Skybridge is currently facing an exodus of investors from its flagship fund due to the fund's poor performance over the past 4 months. The company risks losing over $850 million as investors demand to withdraw their money mounts. One of Skybridge Fund's Legion Strategies has already suspended redemptions, leaving investors unable to withdraw their money. Again, I don't just say it in the cryptocurrency industry, I say it across all industries: retail investments, stock market investments, real estate investments. Just keep yourself safe in this crazy market, because this macroeconomic situation is not going to get better long term. Long term, I feel like it's going to get worse. And it is what it is. Twitter blames Elon Musk's buyout uncertainty for missed Q2 earnings numbers. I feel like Twitter just wants to have a scapegoat for everything. After reading this earlier today, and I just find it interesting because Elon was like, oh yeah, I'm gonna buy it, and then he decided to pull out essentially last minute, and now all of a sudden Twitter's like, oh, it's his fault. It's just like, okay, whether he was gonna buy it or not, why don't you still work out your Q2 earnings? It's just stupid. Andrew Thorabalas. Twitter announced its Q2 2022 financial results on Friday, revealing lower than expected numbers for revenue, earnings, and user growth. When naming reasons for the slowdown, the company placed partial blame on Tesla CEO Elon Musk for casting uncertainty on the acquisition deal. According to Twitter's press release, the company's revenue decreased by 1% year over year to $1.18 billion. A Refinitiv survey of analysts had said an expected revenue of $1.32 billion. On one hand, advertising revenue, which represents the vast majority of Twitter's total inflow, showed a 2% increase during that time frame. However, this was more than offset by a 20% fall in subscription and other revenue, almost entirely due to Twitter's sale of MoPub to App11. The losses didn't stop there. Costs and expenses totaled over $1.5 billion last quarter, with $33 million related to the company's pending acquisition in Q2. Furthermore, while monetizable daily activity users grew to 237.8 million, up 16.6% compared to Q2 2021. It still fell short of analysis predictions of 238.08 million, which is funny because how can you have a 0.8 of a person? And how can you have a 0.8? I don't know, like, are they counting bots in this? makes me wonder, like, how can you be 0.08 or 0.8 of a person? Whatever. The company reported a net loss of $270 million, representing a net margin of negative 23% and diluted EPS of negative 0.30 or negative 35 cents. Twitter claimed that the revenue drop can be chalked up to, quote, advertising industry headwinds associated with the macro environment, end quote, alongside uncertainty related to the pending acquisition of Twitter by an affiliate of Elon Musk. Twitter also stated that it would host no earnings call nor issue a shareholder letter related to its Q2 earnings due to the pending acquisition deal. Elon Musk and Twitter are now locked in a legal battle wherein the former wishes to withdraw from their $44 billion acquisition agreement formed in April. Musk claims Twitter has failed to provide him with useful information concerning the prevalence of spam bots on the platform, a problem he said he wishes to solve when in charge. But Twitter believes such claims are a pretext for leaving and hold no merit. Quote, Musk apparently believes that he, unlike every other party subject to Delaware contract law, is free to change his mind, trash the company, disrupt its operations, destroy stockholder value, and walk away, end quote, read Twitter's court documents. Twitter's stock fell slightly over the weekend following Musk's reversal of plans and still sits considerably short of his buyout offer of $54.20 per share. Tesla released its own earnings report on Wednesday, revealing that the company sold nearly all of its Bitcoin holdings. Musk claims that the sale was unrelated to any overreaching thesis about Bitcoin as an asset, which we will get into a little later. Pretty interesting that he decided to just up and dump a bunch of Bitcoin, and there was just like so many memes going around that I was like, what's the point of you even dumping all this Bitcoin? And this is my theory on it. So a couple of months ago I had read an article, I don't think I had put it out on YouTube, that Musk was no longer going to accept Bitcoin for Tesla. If you go to buy a Tesla, you can't get Bitcoin because he believed that it was not green energy. So I think the reason why he dumped a lot of his Bitcoin is because he still believes that it is not green enough per se. But I think part of it too is he just likes to disrupt the market. And again, Web3 and crypto was supposed to have nobody tell us essentially what to do, or nobody like infringe on market by, you know, low sell high. And obviously we're letting it happen with billionaires or trillionaires, whatever he is, but he's not the only one that has done this. I've seen several other people buy and then dump it and just walk away with their hands clean, and it's got to stop all the way through. And you know, we've got to nip it in the butt now. And of course people get heated because of the current macro, not just the macroeconomics that we're in, but the bear market that we are in as well. So it's not a good mix all the way through. And I think it's just, I don't know, I think we're in for a really, really bumpy ride in the next 8 to year and a half. I don't necessarily know if Bitcoin's going to come back. Would I love Bitcoin to come back? Yes. Will it? I don't know. That is my son throwing who knows what over the baby gate. Tesla sold 75% of BTC holdings. Crypto market reclaims $1 trillion. Ethereum merged 90% complete. This week's recap, written by Georgiev. The past 7 days were very eventful. Yes, clap my hands. Yes, it was. And fortunately, the week ended up in green. The total cryptocurrency market capitalization reclaimed the coveted $1 trillion. level and is currently sitting at $1.1 trillion. This comes on the back of considerable increases across the entire market. Starting with Bitcoin, the cryptocurrency is up 14% in 7 days. At the time of this writing, BTC trades at around 23,500, up 4.5% daily. This time last week it was sitting at 21K, and it was mostly up from then on. The weekly high was charted on Wednesday when the price soared above $24,000. However, during this quarter's earning report, Tesla revealed that it sold approximately 75% of its Bitcoin purchases into a fiat currency. Inevitably, this shook the market and price tumbled to $22,000. Interestingly enough, the dump was somewhat contained given the magnitude of the news, which further strengthened the prevailing narrative that the ongoing recovery rally might continue. Elsewhere during this year's edition of ETHCC, an Ethereum-oriented conference held in Paris, Vitalik revealed that the job of the Ethereum 2.0 merge is nearly 90% complete. This will effectively end proof of work era of the protocol and see its transition to proof of stake, a move that will considerably decrease its emittance rate and the supply hitting the market. The rest of the market is also painted green. Binance Coin is up 13.2%, ADA 13.5%, Sol 15.6, DOT 14.6, SHIB 14.3, and Matic 25%, and so forth. It's interesting to see how the next week will shape up, as the Fed's July meeting is scheduled for the 26th and the 27th. They're expected to announce yet another rate hike to curb inflation, which is just like, really, because inflation is going to happen anyway. I'm just like, at this point, our inflation is like, what, 9.123, I don't even know, percent. And it's going to get worse. And I just don't think it's going to get better. I mean, I've said it before, macroeconomics is not going to get well. On this week's crypto headlines you can't miss. Former Coinbase product manager accused of insider trading, not surprised. In what seems to be a first for the cryptocurrency industry, which it's not. A former Coinbase product manager has been accused by the U.S. Department of Justice of insider trading. He was allegedly giving information about coin listings and selling them during the hype. Not surprised. Loomis Gillibrand crypto bill likely to remain on back burner this year. One of the most proactive cryptocurrency regulation proposal has been put on the back burner. It appears that U.S. policymakers continue procrastinating when it comes to setting forth clear-cut laws for the industry. Tesla sold $936 million of its Bitcoin holdings in Q2. Coinbase held no exposure to 3AC, Voyager, or Celsius. The leading US-based cryptocurrency exchange Coinbase had no exposure to Voyager, Celsius, or Three Arrows Capital. The company revealed this in a blog post earlier this week, saying that the risk these entities took was too high and too concentrated. Minecraft creators will stop supporting in-game NFTs. Pretty interesting. One of the most popular computer games, Minecraft, will not support in-game non-fungible tokens. The company behind it says that enabling NFT support would divide their community, a situation they did not want to allow. Polygon launches ZK EVM scaling down solution for Web3 adoption. Ethereum Layer 2 scaling solution Polygon has launched its zero-knowledge Ethereum virtual machine, or ZK EVM. This is a new Ethereum equivalent scaling solution that takes advantage of zero-knowledge proofs to enhance scalability and throughput. And there's the price analysis for anybody who wants that. Vitalik Buterin funded AI research grant with a last year Shiba Inu donation, written by George Georgia. Back in 2021, Vitalik Buterin received trillions of SHIB tokens, and even though he burned some, he also kept some with the intention to donate. In one of the burning transaction hashes, Buterin explained, "I have decided to burn 90% of the remaining Shiba tokens in my wallet. The remaining 10% will be sent to a not yet decided charity with similar values to Crypto Relief, preventing large-scale loss of life, but a more long-term orientation." One of the initiatives that he apparently funded with some of the donations was the so-called Vitalik Buterin PhD Fellowship in AI existential safety. It is designed for students who are starting their PhD program in 2022 and plan to work on AI existential safety research. It also included existing PhD students who wouldn't otherwise receive funding to work on the same matter at universities in the US, UK, or Canada. Annual funding will cover tuition fees and the stipend of the student's PhD program up to $40,000, as well as a fund of $10,000 that can be used for research-related expenses such as travel and computing. The first group of recipients of the grant has already been selected. It was announced on Wednesday, and here they are. Again, mostly men. Notably, Buterin thanked the entire Shiba Inu community, saying that without them, this would have not been possible. Big thanks to the Shiba Inu company whose cryptocurrency made these fellowships possible, he noted. Bitcoin goes through largest negative mining difficulty adjustment in over a year. Xander would have to read that one. He is a miner. I'm not. Terraform Labs co-founder residence raided by South Korean authorities. This is interesting. Written by Shainika Deka. As a part of the broader investigation of fraud, South Korean prosecutors have raided the house of Terraform Labs co-founder Daniel Shin. Bloomberg confirmed a series of raids conducted by the Korean Joint Financial and Securities Crime Investigation Team on crypto exchanges and offices, including the Terra co-founder's residence and his payment app, Chai Corp, over allegations that fraudulent activities may have triggered the demise of Terra USD or UST stablecoin. The authorities conducted raids in 15 locations, including Bitham, Upbit, Coin One, and 4 other exchanges earlier this week to probe a fraud case linked to the crash of Terra USD and Luna Classic. The investigators reportedly searched and discovered some evidence of misconduct by Terraform employees. The team is currently looking into the potential transfer of funds to different companies owned or operated by Do Kwon to evade taxes. As such, Shin's firm is also consideration. State media recently reported that the authorities had detached a suspicious flow of money via subsidiary Flexi Corporation. Popular security company Uppsala Security recently asserted that the wallet behind the attack, initiating the run against the algorithmic stablecoin UST and its depegging, was in fact owner-controlled by Terraform Labs or the Luna Foundation Guard. In the aftermath of Terra's historic debacle, South Korean Justice Minister Han Dong-hoon met with chief officials from the U.S. Securities and Commodities Task Force to focus on launching a cooperative investigation against crypto and financial crimes. Pretty interesting. I'm not surprised. I think it's just going to continue to get more and more and more. SEC attacks Coinbase over alleged securities. CFTC and the exchange disagree. Written by Jordan Lionchev. On the 21st of July, the U.S. Department of Justice indicted Ishan Wahi, a former Coinbase manager, along with his brother and a third individual, on insider trading charges. This was a historic first indictment for insider trading in the crypto space. Now, though, as the dust is settling, a dispute over the nitty-gritty of the case seems to have appeared between the SEC and the CFTC, an anti-fraud authority whose purview often overlaps with that of the former. According to CFTC Commissioner Caroline D. Pham, the decision to assess 9 of the tokens mentioned in the indictment as securities could have far-reaching implications for future legal disputes and consumers alike. The tokens classified as securities in recent cases are ENS, Gala, Power, and ALCX, among others. The SEC's heavy-handed tactics were called into question by Ms. Pham, who stressed the importance of regulatory authorities working together to prevent unnecessary friction caused by uncertain regulation. Regulatory clarity comes from being out in the open, not in the dark. Given the overriding public interest and the open questions on the legal status of various digital assets, such as certain utility tokens and DAO-related coins, the CFTC, quote, should use all means available to fulfill its statutory mandate to vigorously enforce the law and uphold the Commodity Exchange Act, end quote. The CFTC commissioner's statement was applauded by Coinbase, whose chief legal officer went on record to reiterate the company's commitment to avoid securities trading on its platform. Quote, instead of crafting tailored rules in an inclusive and transparent way, the SEC is relying on these type of one-off enforcement actions to try to bring all digital assets into its jurisdiction, even those assets are not securities, end quote. The DOJ appears to agree with Coinbase and the CFTC, choosing not to file charges for securities fraud against the 3 defendants. For now, only the insider trading charges remain. Paul Grewal, the CLO of Coinbase, went on to say that unfortunately there is still no clear regulatory framework for digital securities in the U.S. In light of this fact, the official policy of Coinbase is to avoid any tokens that could be viewed as securities and immediately comply once a sturdy legal framework regarding digital securities is set in stone by the U.S. government. For now, the court case will go on without the additional charge of securities fraud, focusing on insider trading and conspiracy charges. Pretty interesting. I think we're just going to continue to have a lot of stuff come up, and let's see how long this one is. Well, it's not that long. I'll read it, and then we'll end it, and I will upload it so you guys can see it. Former Coinbase product manager accused of insider trading, written by Felix Mullen. On July 21st, the U.S. Department of Justice filed an indictment against Ishan Wahi, a former Coinbase manager, and 2 other individuals for obtaining approximately $1.5 million through cryptocurrency insider trading on the Coinbase exchange. According to the Department of Justice, it is the first case of insider trading in the crypto industry. The defendants used their privileged knowledge while working at Coinbase to sell information to others and invest in cryptocurrency scheduled for listing on the exchange. Ishan Wahi and his brother Nicole Wahi were arrested this morning in Seattle, Washington. Wahi's partner and friend Samir Ramani is still free but wanted. Wahi had access to exclusive messaging groups for high-ranking Coinbase employees. Because of this, he received privileged information about the exact date on which some cryptocurrencies would be listed on the platform, being able to invest large amounts of money before other people. A Twitter post was critical to the investigation. The account reported that someone purchased hundreds of thousands of dollars of tokens exclusively featured in the Coinbase asset listing post about 24 hours before it was published. Coinbase replied and assured that it was already conducting the appropriate investigations, adding that whoever engaged in these fraudulent activities will be immediately fired and referred for prosecution. After a month of investigations, Coinbase tracked down Wahi and scheduled him for a meeting on May 16th. But the evening before the meeting, Wahi purchased a one-way flight to India. He couldn't get away because he was arrested at the airport. Before his arrest, Wahi sent several messages to his brother and business partner alerting them of the investigation. All three defendants face conspiracy charges and wire fraud, each carrying a maximum sentence of 20 years. However, the maximum penalty can only be determined by the judge. Coinbase has had a long track of collaborating with U.S. authorities, both helping them fight crime and shaping their business to comply with federal regulators. For Damian Williams, U.S. Attorney, these charges will serve as a reminder of the U.S. authorities' effectiveness in fighting crime, even breaking the myth that the Web3 is untouchable and outside the law. Quote, today's charges are a further reminder that Web3 is not a law-free zone. Just last month, I announced the first ever insider trading case involving NFTs. And today, I announced the first ever insider trading case involving cryptocurrency markets. Our message with these charges is clear. Fraud is fraud, whether it occurs on the blockchain or on Wall Street. Michael J. Driscoll, FBI Assistant Director, said that even though the fraud committed was on a cryptocurrency exchange and not in a traditional market, today's action demonstrates, quote, the FBI's commitment to protecting the integrity of all financial markets, end quote. Pretty interesting. I think this is just the first in many insider tradings that we are going to see, especially just not NFTs, but also Coinbase coins. I mean, any exchange has the opportunity to pretty much be used in a fraud case, and insider trading is obviously rampant. And I think that this is something that the U.S. is going to continue to look at and make due for and bring those to justice, because we all know that that does happen. So with that, I'm going to end it here. And thank you so much for staying with us. If you have stayed with us for the last 30 minutes or so, I am forever grateful. Remember to like, subscribe, hit the notification bell. As always on Twitter, or not Twitter, on YouTube. I've got Twitter on my mind. Twitter, both of our personal Twitters as well as the AM Daily Twitter is on our YouTube account as well. And then we have Cointree. And remember, guys, please do your own research before jumping into any kind of investment, whether it's retail, stock market, cryptocurrency, NFTs, real estate, anything. Do your own research. Make sure it's best for you, and make sure to get your stuff off exchanges onto a cold storage wallet. And beware, because I feel like this is just the beginning in a wave of going to be bad news and bad macroeconomic situations.